Salar Ghahramani is a professor at Penn State University who's done some research on what a U.S. sovereign wealth fund would mean for the U.S. Well, the sovereign wealth funds we hear about all have wealth. They come from locations where there is mineral wealth or something that adds to the Treasury. The U.S. has a big deficit. We don't have sovereign wealth at this point.
Yeah, it's interesting. There have been very, very few. In fact, there may not have been any sovereign wealth funds that were not created by some sort of a surplus. And as you just noted, we have a deficit and we have a national debt and no surplus. There might be creative ways to gather assets and put it into the portfolio of a sovereign wealth fund. But again, I would venture out and underline that word creative. So it may not be intuitive, but I think there are ways.
One major challenge that stands in the way of a U.S. sovereign wealth fund is the issue of the national debt, which runs $36 trillion deep.
One of the concerns about the proposed U.S. sovereign wealth fund is that is it the most efficient way to address the specific reasons for the creation of the sovereign wealth fund? For instance, if the reason is to be infrastructure spending, Congress has already allocated billions of dollars toward, trillions of dollars in fact, toward infrastructure spending. So yeah, there's a concern that creating a brand new bureaucracy to answer whatever the question might be, whether it's potential Social Security shortfalls down the road, whether it's infrastructure projects, would it make sense to divert the attention from paying for those specific projects and going through a brand new bureaucracy to address those issues?
But there might be some benefits to a potential U.S. sovereign wealth fund.
Ideally, if the long-term interests, financial interests of the United States is the primary concern and not so much driving geopolitical interests, and that can have legitimacy too. Infrastructure projects potentially addressing potential shortcomings of Social Security and so on could potentially be looked at as a legitimate usage of the sovereign wealth fund. However, there could also be the possibility that the sovereign wealth fund's primary purpose is not so much the long-term financial interests and the financial outcomes of the fund itself, but being in line with some other national interests, whether it's related to foreign policy or whatever else the case might be.
Where could a fund like that invest? Would it work to have it invest in the U.S., or would it need to go overseas to avoid conflicts of interest?
There are sovereign wealth funds that are created with specific legal mandates of asset allocation strategies and even the asset classes in which they can invest. Norwegian legal mandate, for instance, for the Norwegian sovereign wealth fund is as specific as saying that no more than 5% of the fund's assets can be invested in asset class X. And there are also percentages specifically designed around areas of geography. So ideally, there should be a legal mandate, transparently discussed, that limits, that puts at least constraints on what the sovereign wealth fund can invest in. Ideally, a good sovereign wealth fund would be diversified across geographies, across asset classes, across even external asset managers, which is something that many sovereign wealth funds employ.